Hello, and welcome to an all new episode of the Transfix Take podcast, where each week we deliver news, insights, and trends for shippers and carriers. It's the week of March 27th. I'm Jenny Ruiz, and I'm joined by our market expert, Justin Mays. Mays, how are you doing today?
I'm doing good, Jenny. We woke up to a lot of disruption, but I'm doing good.
Yeah, that said, let's get right into it. In the early hours of the morning on Tuesday, March 26th, the Francis Scott Key Bridge in Baltimore collapsed after a column was hit by a large container ship. Now, all members of the container ship have been accounted for, but as we record this, there is an active search and rescue underway by the U.S. Coast Guard. The latest is that upwards of 7 individuals may still be in the Patapsco River, and it's said that there may have been a large tractor trailer that was on the bridge during the collapse. This is a horrific accident, and our hearts go out to the families of everyone involved, and we absolutely hope for a successful recovery of everyone missing. Now, Mays, given the Baltimore area tunnels are no hazmat, and this was the primary hazmat freight bypass for East Baltimore. How do you think this is going to import the East Coast import market for the foreseeable future?
Yeah, so I think actually we're not going to see too much of a disruption when it comes to especially the truckload volume. Luckily, this is taking place in the Northeast, similar to when we were speaking about the I-95 bridge collapse in Philadelphia. There's so many other, there's a significant network of highways. For Baltimore, you have I-95, you have I-695 West, which is where hazmats will be rerouted. You have multiple tunnels, you have I-895. The amount of roads that get you through Baltimore are pretty large. But in the, today, tomorrow, the following days, I'm sure you're going to see a lot of congestion, a lot of traffic as people reroute around. Not just that, you're going to be adding on some time for trucks.
Right.
When it comes to imports, Baltimore is a large port, but it's not one of the large ones on the East Coast. It's only about 13% of the container volume that, the port of New York, New Jersey would see.
Okay.
Other ports on the East Coast could easily absorb that, but exports and imports are definitely going to be disrupted more significantly short term. You're going to have a lot of imports that are waiting to go there that are immediately being repositioned to other ports. And then exports that are going to have to be removed from the port elsewhere or sit until that gateway is open, because that bridge collapse is blocking all of the ports in Baltimore. So there is going to be a significant shift for the short term for imports and exports. When it comes to the trucking side, I think after the next couple of days, we're not going to see much of a significant market disruption. Other than if exports do have to be shipped out of other ports, you may see a lot more need for truckload volume to, move that export volume.
Right. And if I'm not mistaken, a lot of the imports that come in through this particular Baltimore port are more along the lines of automotive, manufacturing, and so forth. So, those will be, like you said, rerouted to either the New York ports or perhaps Port of Miami, if that's an option as well. Am I right in that?
Yeah, like you said, the most significant import volume that you see, especially on the container side, is going to be cars.
Yeah.
And you could shift them to Charleston, Norfolk, Boston, New York, New Jersey, like you said, Savannah. Imports on the East Coast are down right now compared to where they were during the pandemic. So
Right.
there is bandwidth at those ports. You've already started to see a shift back to the West Coast, that this could actually, push more momentum just because of what's happening in the Suez Canal and Panama Canal. So again, there's opportunity for those ports to easily be taken in by other East Coast ports. But in the short term, we're going to see some disruption, but I don't think it's going to be anything game-changing when it comes to the truckload market and even really the maritime market.
Yeah. Well, let's hope that everyone is able to be recovered. And that said, I think we need to move into the regional breakdown portion of the show. Now, as we drive out of March, it looks like there hasn't been too much movement with the national average rate per mile, with very slim increase driven by regional seasonality. Mays, can you give us a breakdown of where we stand today with that and tender rejections?
Yeah, so over the past week, from the last time we recorded to today, we're actually been flat. I mean, there's been up and downs day to day, but we're coming in at $1.66 rate per mile, line haul only at a national average. That is where what we spoke about last week. When it comes to tender rejections, we're seeing a very, very slim upward tick, but nothing significant. I think over the next week, we're going to see rates increase as we go through end of quarter, end of month, before starting to see them fall again at a national level through the first half of April. But it's going to be very regional specific, as you mentioned.
Okay. So the Midwest continues to see a dip as most markets, with the exception of, and I've got a couple here, so Bloomington, Des Moines, Fort Wayne, Hutchinson, Lexington, Rapid City, and Taylorville markets. What can we expect out of this region?
So we are starting to see the Midwest slow down the downward momentum, but that's likely going to be created due to the end of month, end of quarter. We're going to continue to see downward momentum in the entire Midwest at an aggregate view over the next couple of weeks. It's important to note that the larger volume markets are still seeing that easing. It's really the low volume markets that are spiking up and down depending on the week. But overall, we're going to continue to see that momentum go downward, especially if that freight is headed to the south, southeast, or west coast.
Okay, good one to watch. Now, similar to the Midwest, the Northeast is almost twinning here. It continues its downward path with just the Boston, Elizabeth, and Erie markets showing some gains. What's the story with the Northeast this week?
It's almost identical to the Midwest.
Yeah.
Those the higher volume outbound markets are continuing to see that downward trajectory, but the momentum is slowing, which will pick back up some steam, I think, after the first week of April, especially for freight going down to the southeast. We're getting into that period where that seasonality is really starting to kick in. Freight moving from the northeast to the southeast, that's something that everyone needs to keep an eye on because it has such a significant seasonal change in rates.
Yeah, I'm actually really looking forward to April because I know that seasonality really does kick into high gear for a lot of these regions. So we're gonna see a lot of exciting things there. But rounding out the trifecta of loose regions is the coastal region. And given its big dip mid-month, is there a chance of gains as we drive into May for this region?
So I think as we get through April, we will definitely see seasonality approach upward to the coastal region. But over the past week, the coastal region overall has actually seen the most momentum downward, which makes sense because it's been kind of stubborn for the last couple of weeks.
Yeah.
I think it's going to continue to follow trends to the northeast. Freight going down to the southeast from the coastal is continuing to pick up, more momentum of a decrease in rates. But again, like you said, late April and a month from now, we'll be probably talking about this region heating back up.
Okay, and speaking of heating up, the West Coast is quickly becoming one of my favorite regions, again, with one of the biggest gains we've seen across the month, thanks to tightened capacity. It's almost like an even split of markets that are seeing rate increases and even decreases. So do you think this will continue through the next couple of days?
I do. I think we're going to continue to see momentum pick up on the West Coast for the foreseeable future.
Yeah.
As you called out, there's a lot of markets going up, going down, but the highest volume markets in particular, especially in Southern California, even Las Vegas, Phoenix, are all seeing increases. That's really going to be driving the difference over the next couple of weeks to see that West Coast momentum continue that upward pressure, which we would anticipate with seasonality this time of year.
Okay. Now, the South is also another region that we're keeping a close eye on, with some of that seasonality starting to pick up in this region. Over the last 30 days, we've seen a near 1.5% increase in rates, with most markets picking up, including that big Dallas-Fort Worth market. What can we expect here, Mays? Will the gains continue?
So we're starting to see the gains slow down, especially over the last week. I think we're going to see some pressure again this week. Again, just really slotted to being around end of month, end of quarter. Going into April, I think we're going to see this region potentially plateau. We're seeing imports slow down. A lot of imports were coming from China to Mexico up to the U.S. to bypass tariffs, most believe. We're starting to see that volume slow down. So the region itself is starting to slow down. But as you called out, we are approaching produce season, and that avocados in Texas and other produce in states like Arizona and New Mexico, and that comes through South America. We're going to see this region probably plateau, remain flat, and then start increasing through the month of April, probably about mid-April.
Okay, we'll keep a close eye on that. Now, closing out with the Southeast, another region to keep an eye on. I mean, at this point, they're all ones to watch, but while gains here seem to be gradual, capacity is still tight in most markets, and this is another one of those regions with even splits of gains and losses. So, Mays, where do you think we'll see some of the biggest increases with where freight's heading out of this region?
It's definitely going to be Florida.
Yeah.
We're starting to see Florida take that natural seasonality, especially freight going to the Midwest, Northeast, coastal region, just about anywhere, to be honest. Now, that being said, if you go up a little bit more northern, where I am, Atlanta, Georgia, we're not seeing too much tightness, and it is the highest volume market in the Southeast. But overall, expect the Southeast to continue to pick up some momentum over the next couple of weeks, and even longer as we get farther into seasonality.
All right. Looks like we're heading into an exciting month, of course. But as we close out the month of March, that means that it's time for a crystal ball review. So here's what we predicted at the top of the month. First point being the national average rate per mile was projected to drop by around 3%, maintaining loose capacity and moderated demand. Where do we land with that one?
So that one I got wrong. We actually saw rates increase, especially over the last 2 weeks of the month. Now, that's particularly driven by the South region. The South region, we continue to talk about week after week because it was pretty surprising how fast it heated up. Now we're seeing that die down, but, it did heat up the national overall. But if you took the South out of it, we did see the national average then decrease by about 2.5%. But again, there's always a surprise that's thrown at you in the freight industry. So we did see an actual national average increase, mainly driven by the increases coming from the South region.
And we also saw a couple of weather surprises that I'm sure impacted this region as well. And we can predict the weather. So the other was tender rejections were forecasted to decrease to approximately 3.25% by month's end, driven by new contracts and market adjustments. Where do we land there?
It's not far off. Today, as we're speaking, we're right around the 3.3 mark.
Okay.
So, tender rejections have continued to remain relatively flat with a slight downward trend. But as of recent, the last couple of days, we're seeing a very slim upward tick. But it's really going to be driven by end of quarter, end of month.
Gotcha. And then we did a couple of regional call outs here. We don't have to go through the South again, but we did predict that the South was expected to remain the tightest market throughout the month, which actually, by that, it did. It just was, unexpectedly tighter than what we thought it was going to be. The Midwest and Northeast projected to experience the most significant rate reductions, and then West Coast may see increased desirability in markets due to seasonality. Where do we land with those three regions, Midwest, Northeast, and West Coast?
I would say we were spot on, all of them, right? It's just to the extent. I would say that we nailed it on the Midwest, Northeast, and West. Yep. And as you called out, the South was just tighter than most would have anticipated going into the month of March.
All right. Well, we'll see you next week with an all-new episode of the Transfix Take podcast, where we'll give you new predictions for the month of April. And I'm very surprised that we're here because it's like every month we blink and here we are. That said, everyone, drive safely, and we will see you next week.